So, good news, yeah? Unemployment claims coming higher. Trump media has been filing for a Bitcoin ETF. No conflict of interest there. I see what you did in the Discord, my guy. When is it going to cut? Now, there's two scenarios that I think could actually play out. We're either going to get an emergency meeting by the Federal Reserve, and that's where they're going to push for the cut, or at the FOMC, which is in 13 days' time, I believe, yeah, they're going to say, we're going to cut today. Now, they have done that in the past, where investors with the expectation that, nope, they're going to keep rates as they are, and then on the day of the FOMC, they go for the cut. There's also a third option. The Fed does nothing. Now, Trump's been putting a bit of pressure on the Federal Reserve, primarily Jerome Powell. And Powell looks like he's going to be sticking to his guns. You see, what we need to see is we need to see consistency in the data. We don't have consistency. JOLTS job openings come in yesterday at a wild figure. So things are okay. Then the ADP comes out at another surprise reading with barely any jobs available. And if you remember not so long ago, the JOLTS job openings report was scrutinized because lots of companies have been advertising that they are looking for people in work, but they're not taking anybody on. And that's what the JOLTS job opening story is. It's based on all these companies that are listing jobs from companies that are looking for people to work, but they're not taking on those jobs. And it's like they've been saying that it's a means for these companies to make it look like they're being productive just to retain shareholders' wealth in the actual stock price. Because if a stockholder's looking at its stock and thinking, hold on a second, there's no prospect of them employing people, are things slowing down? Why am I going to hold on to this stock? So the JOLTS job openings report, it has been scrutinized. But the main reading that we're looking for is the non-farm payrolls. And that's tomorrow. Now, today we've seen a little bit of volatility in the marketplace. Nasdaq's pumped up, Bitcoin's pumped up, and it doesn't look like it's stopping, and it needs to clear out a very important range, which we'll be talking about very, very shortly. Now, the market's not open just yet. We're waiting for the futures markets, which will come in the next 25 minutes. They too are going to react. The Eurozone, they've cut their interest rates yet again, and they're saying that inflation is still uncertain. So what does that mean? Now it means that the euro is still more lucrative for investors in terms of borrowing. But in terms of yield, you're not going to be earning too much on the euro because they're cutting their rates. So that means investors are going to be getting less yield in terms of buying European bonds. But that doesn't mean that they can't go and buy euros and then go and buy European stocks because it's cheap to do business. And that's what Donald Trump's problem is with Powell. It's like he's suffocating the possibility of investors coming into the dollar. The US right now is the only country in the world in terms of economic policies that has a very high interest rate. Why would you go and borrow dollars when the fact that it's still expensive, and of course you're losing appreciation on the dollar itself? So what we're going to do is going to break it all down for you, ladies and gentlemen, just to understand what we can expect going in today. We still got a little bit more data that could be coming out. No, we do not have any more data. Today, the day is done. We've got the press conference happening as we speak, but nothing has come from that anyways. But let's break it all down and understand exactly what the story is. So in front of you, this is what we got. Main refinancing rate for the euros coming at 2.15% as expected. And then, of course, the unemployment claims came in at 247,000 when they expected 236. Quickly looking at the behavior of the data, you can see it's all over the place. There's no trend in the data. 1 minute it's up, next minute it's down. Look at the JOLTS job openings. 1 minute it's up, next minute it's down. There's no clear consistency. And this is what the Fed's looking for. It's looking for a contraction in the labor market. So next week's unemployment claims, if it comes out, well, when it does come out, that has to show an increase of 250,000. If they can see that there is effectively a trend in the data, then that's going to grant the Federal Reserve to cut the rates. Now, investors are still of the expectation, there you go, 13 days. The investors are still of the expectation that they are going to keep the rates the same in the next FOMC meeting. Now, just wait for it. Let's wait. Here we go. 99.2% chance that they're keeping the rates at 4.25, 4.5%. And the data today, I mean, Trump's bound to say something, given that Trump has been saying something. He's just been on the phone to China. So happy days over there. So now what's going on is the market is pricing in the idea of rate cuts, and that is 2 rate cuts in this year. Now, just to back it up with that, if we just go to July, we make an assumption that they could be cutting the rates in July. Well, investors are betting for a 68.4% chance that they're keeping it at 4.2, 4.5%. Going into September, we can see that it's now edging towards the 4%, 4.25. So based on investors' expectations, although the market is pricing in that logic, okay, they are still expecting by September that the rates will effectively get to 4 to 4.25%. When we go into next week's data, we're going to get the CPI. CPI is expected to come in at 2.3, and then of course the PPI is coming in lower. So that's good news if the PPI comes in lower, because it means that the prices of cost of goods of services is actually coming down. So that's what the Fed needs to see. But if we get wild figures again, then the Fed's just going to go back to the drawing board and say, we need more data, which is a bit of a pain in the ass, but never mind. Bitcoin, looking at Bitcoin right now, it is moving up quite significantly. Now, we've only moved away from the psychological ranges, which is a good thing, because usually when they do mark their way away from the psychological ranges, historically in the week, we've seen them reject those zones and come back down towards them, okay? So if you've managed to exploit a nice little flavoursome move and you're a futures trader, take some profits off the table, but leave some runners on as well, okay? Just in case you have an opportunity to see if Bitcoin's going to continue higher, and then on the retrace, add to the trade to then see a higher move to the upside. Putting it into perspective on the daily time frame, just to put it there, you can see that Bitcoin is trying its hardest to get back up above the 5 and 13 EMA. So they crossed over from there, stayed below it, and this candlestick right here is trying to work its way above the 5 and 13 EMA, could even go further into the wick itself. Who knows? But primarily, we need to see how the day ends up and what is in store for this candle. Because if this candle can successfully close above the 5 and 13 EMA, then that could be a promise of Bitcoin going higher. If it can't close above the 5 and 13 EMA, then we might end up seeing resistances getting triggered. And this is where articles are coming out with this story here. Bitcoin at 105, bull market correction or bear market beginning. So everyone's asking the questions. And what I think's going on here is, yesterday, Bitcoin's price action, well, the order flow wasn't really giving us anything. So we go over to Bitcoin's order flow. You can see we've got offers coming into play right now. Yesterday, we didn't. 75 million at 107,300. That's just come in over the last hour. And then at the same time, we've got some orders down here. We've got 23 million just further down below. Where was it? Let me just find that. There we go. 10 million at 102. And then where was that 23 million? 21 million. There it is. I can't even be bothered to find it. You joke. 21 million at... I give up. Anyways, 21 million in that range. Never mind. Okay. So yeah, that's what we're looking for the holders. Okay. Make sure you're keeping an eye out on how price behaves around the 5 and 13 EMA. Bitcoin dominance making its claim to the upside. I'm still expecting the dominance to climb up, ladies and gentlemen. Going over into the Arkham to see where we are with the balances. I mean, it's a bit rich that last week they were effectively at 600. There we go. So it's come back down and it's now managed to get only a couple of thousand off from its all-time high in principle. And we got here, we don't really see that much activity. You got some purchasing and moving on Bitcoin, nothing really significant. BlackRock hasn't been really doing too much on the chain itself. Quickly having a look at the order flow in terms of liquidations. So we've got some liquidations coming into action. We've got this big batch up here at 106,950. You got roughly around 203, yeah, about nearly $500 million plus in liquidations to the shorts to the upside at 106,650-ish. Quickly going over into that, that would take us towards this range right here, 106,650. So that'll put us up in this range towards this wick right here. Okay, so this is what it's all about. It's about how the market is going to react once it does actually open. Go to the 1 hour time frame, flip that over. Okay, so as much as we want to see Bitcoin still continuing its narrative higher, it still has a little bit of headwind resistance up here. And this is where the block principle comes into play. You've got this green vector candle region, which at any moment, based on the history of the way Bitcoin has been moving, it could effectively reject these ranges. We'd need to see a clean break above this block range right here to suggest the idea that Bitcoin is going to continue higher, okay? So 1 hour candle marking up, it's broken the 200 EMA, it's moving away from the psychological high, and this is what I mean about applying logic to the move, okay? This move throughout the week has been above the psi range, come back down, above the psi range, come back down, above it, back down again. And the logic says that there's clearly bid interest inside of this range. So the market naturally is going to want to go back to those ranges, pick up the orders, because if it does create the frequency of traders wanting to sell, okay, on the back of the good news that's coming in for the market, that's going to want to encourage investors to step in and start buying the Bitcoin, okay? 2 seconds. And that logic itself is going to end up sending price down to then send it back up again, all right? Quickly going over to other assets, Ethereum. Ethereum's been choppy, man. It's been very difficult looking at Ethereum, and it hasn't just gone anywhere. It's just stuck in this range. It's paused. It's not doing too much. Going to Solana. Solana's made a nice little move to the upside, but one candle, it's not even taken out this liquidity down here at 150, but it's still stuck inside of this psychological range. Usually that's what you get when they're accumulating, all right? You do get that. But speaking of which, it's happening today. Circle. This is the one competitor for Coinbase in the US stock market. Circle stepping up and debuts at $31 a share. Naturally, you're going to see Circle mark up to then come back down. It will trade negative over the next week or so, and then accumulation will start. It always happens with IPOs. You get an initial reaction. They put it out there, everyone's excited, they start buying it, and then it will start to contract. Same thing happened to Coinbase. Came in at like $350, $400 a share on its initial public offering, and then it just slumped from there, and it kept on going down until it's found its feet. But Circle debut, that is going to be a big thing for the cryptocurrency space. Massive. Stablecoin issuer, it's going to be a very interesting story. Once these guys get the funding and all the money for shares, it's going to be a very interesting challenge for Coinbase because they have now got a, how can I put it, a worthy candidate to challenge Coinbase's market cap to get investors over to Circle. So I would keep an eye out on Circle, guys. Most definitely keep an eye on it, but don't be buying it yet because IPOs always end up bringing a little bit of a correction and then it will find its feet and then start accumulating because you might end up seeing it at $31 a share and then it ends up going down to $15. You'd be mugging yourself buying it at 31, okay? Cool. Quickly going over into the stock market right now, just understand where we are over there. So you've got the NASDAQ makes a nice pump up and then it comes straight back down again. This just goes to show the inconsistency of investors. They are pricing things in, it sweeps up and then comes straight back down again. Trump has had a call with China, so that could effectively bring that volatility in. Is there a possibility for a deal? No, I'm not really hearing anything. I mean, looking at the board itself, it says China's Xi and Trump hold phone talks at Trump's request. And there's nothing else on there that is giving me any idea of where we are with that. They should be done with these deals, man. But it seems like that's not going to be the case. Quickly going over into the 10-year bonds market, you can see the bonds market have been trading higher and it spiked up to only look like it wants to start working its way back down again. Going over to the yields have been trading negative, but with the prospect of them potentially coming back up again. 5-year trading positive and the 2-year is currently trading 0.16. So it's the 30-year and the 10-year that are trading negative. So that means investors are effectively going into long-term dated securities. So they're favoring longer-term debt, which is a good thing because the US right now, since Trump has come back into play, it's been the logic of sell America. So as long as the yields go down, then that should, in principle, fuel the market to go up. When the bonds move up, usually you expect the stock market to move up. But sometimes you end up seeing the bonds going up, the stock market going down, and then that tells you that investors want low risk as opposed to high risk. So when you pay attention to that, that's going to help you understand whether you should be buying Bitcoin or not, because that is a very high risk asset. So if you look at the bonds market and you see that going and then the stock market's going down, why would you be buying Bitcoin? Because it's a high risk asset. So if they only want low risk, but they're not going into the NASDAQ, which is a centralized area, it's a legacy market, chances are that they're not going to be buying the Bitcoin. Okay, cool. Quickly going over into the volatility index at the open. We've got this 19.76. There's a lot of complacency with investors across the board, so they're not too worried. But when this goes to 30, that's when you pay attention. You want to buy it high. When it's high, you buy. That's what's going on in terms of the volatility index. Right now, it's trading down below 20. So they don't really do this complacency. They're not really positioning themselves for any concern. Okay. Here we go. We got any questions? Any questions for me? If we know the data is being manipulated, what's the point looking at the data? Better to just trade the swing trades. No, they will cut when they want to, not when the data shows it. No, you listen, when you get data like this, okay? So this morning I was projecting that the unemployment claims was going to come in higher. which then effectively gave me the logic that the NASDAQ was going to come in high, move up, and the euro was going to move up at the same time, okay? So with that logic, why was I expecting it to come in higher? Because the data's not consistent. As I said, JOLTS job openings is a questionable reading, even though it's a high impact data, okay? So the market just wants to seek risk. So when that came in, they were like, oh my God, we've got more work available. Cool. So that means happy days. Companies are employing people, so the economy is all good. Kills the idea of interest rates, but investors react to it at that point in time. Then you've got the ADP. That came in negative when they're expecting it to be positive. So there's already a flaw already with this data. And then when the unemployment claims come in, when you've got such a poor reading on the ADP non-farm, that is a little bit more of a better metric as comparison to the JOLTS job openings. Because remember, JOLTS job openings means that they are advertising work. It doesn't tell you if they are taking it or not. This includes layoffs. It includes people that are voluntarily laying themselves off or just not going into work. There are many metrics behind the JOLTS job openings. But the ADP non-farm employment change, that gives investors a bit of an understanding of where we are. Now, with that coming in lower, it gave me the heads up that potentially going to see the unemployment claims coming in higher. And then we were able to exploit that. So you can just ignore the data. But if you're a short-term day trader, it helps you because then that's going to be the difference between you making a move to the upside or not. If you just go over to the euro on the back of that data, go over to it, you can see euro, it's just pumping. And we were projecting euro to make a move to the upside today off the back of the idea that the interest rates were being cut in the Eurozone. As I said this morning, happy days. It's made the move to the upside. Okay. So, and euro's just pumping. And if euro's pumping, that's bad news. That means dollar's going down because you're not going to get the NASDAQ pumping right now. It shouldn't be pumping against the euro like that. Where is it? Here we go. It's not moving up. So this could be a tell right now. It could be a tell for us to let us understand that maybe if investors are going into the euro, why would you be waiting to buy stock right now when the dollar's just getting smacked? Doesn't make sense, does it? You wouldn't be buying stock. You want to be selling it, which is probably what they did. And then you go over to Bitcoin and you're like, okay, is Bitcoin going to be bucking the trend? That's the logic. Because euro up, that means gold's going up. Gold's moving up. Made a bit of a move. It's come back down. Expectation of what? Interest rates to be cut. The unemployment data came in more. Okay, they've got to cut. So investors will price that in at that point in time. You might get a good little move to the upside with 1, 2, 3 candles. And then once it's priced in, done. It comes back down again. But remember, Bitcoin is slow to move, ladies and gentlemen. It is slow. Let's just quickly go over and look at Aussie yen. See, Aussie yen's moving up. Fundamentally, Aussie yen moving up means that they're taking advantage of the carry trade. So they're using Aussie to take advantage of high-risk assets. So they convert dollars into Aussie, and then Aussie moves up with the NASDAQ. That's the carry trade, okay? Go over to the yen. That's trading positive a bit. Well, it's in technical analysis says that it's moving up, but it's not trading positive for the day. Right now, it's all about the euro because it's now cheap to borrow euros. Where they're putting their money is a different story. Now you're seeing the euro flying up. I mean, where was our setup per se? Let's just quickly go and have a look at it because I know you guys must have taken advantage of that. And if you have, happy days. If you haven't, never mind. Let me just bring that up for you just to put it into perspective. Let's go to the members section on the website. There's a free PDF down there, guys, on the homepage. Get involved and check that out. But I'm explaining to you what I'm putting my logic into as to why I was expecting euro to mark up. Okay, so we just click that right there. Come on, hurry up. There we are. Okay, pause that. There's the setup right there. Okay, so the expectation was structurally euro was getting ready to clear out in and around the psychological ranges. I expected a stop run down and then a move to the upside to claim the 1.15039. Now we're pretty much nearly on our way over there, okay? But we got the little stop run right there at the daily open, and that was news announcements. But then if you married the idea of the macro, given that the euro's interest rates have now been decreased, it's cheaper to borrow euro now. That's why euro's pumping. Now, like I said, the euro and gold have been behaving as safe havens, but they're also trading the logic of the future, macroeconomically speaking. So if interest rates in a nation are going down, it's cheaper to borrow. What's the alternative? Go to the dollar? No chance. It's like the Eurozone kind of understood that the Fed was always going to keep the interest rates high. They've cut their rates nearly 9 times. Okay? So it's the only way that they can compete with the US dollar to inflate the value of the euro, to get money over here, okay, in the Eurozone. Money's not going to the dollar right now, okay? So any moves that you see in the stock market, they're selling, quickly selling, and you can see that commitments coming into play with the fact that the NASDAQ's not making moves yet. And the fact that the NASDAQ has been moving up with no volume is telling you that investors are just quickly trying to sell as much as they can. So even though they finish positive for the day, it's whenever volatility comes in, it spikes it up. But look, like, where's the commitment? It needs to break higher. We need to see strong volume to fuel the idea that the NASDAQ's going to continue higher and, of course, lead us to the idea that Bitcoin is going to follow suit as well. But if you're looking at the macros right now, safe haven assets, yen, euro, gold, are going up because of this uncertainty of the economy in the future, right? But they're also taking advantage of it being cheap. So that's why euro's going up, because they cut the rates. Now I'm going to go and buy myself some European stock because that's performing much better than the US stock. Does that make sense, ladies and gentlemen? Does that make sense? Hey, Tina, if euro goes up, dollar is down. Bitcoin is stronger than, right? Correct. And a weaker dollar also puts pressure to cut rates also, right? That's correct. However, what you've got to understand is this. There are two ways that you can transact on the dollar, okay? And it's all about perceived value, right? So for example, right now, the US dollar is coming in at 98.03. Your purchasing power is dustbin, okay? If there was a dustbin and it was called an asset, it would be Dixie, okay? So whenever you've got your bins at home and your rubbish, just engrave Dixie. And whenever you put something in there, envision investors going to the stock market and depositing dollars to buy stock. It doesn't make sense, does it? Your purchasing power is zilch, okay? So this is what investors are looking at doing. They're either going to be taking advantage of the idea that the dollar itself is so bad, they need to go elsewhere to transact. So you can go to the yen. It's cheap to do so. You can go to the euro. It's cheap to do so. There are some participants that are already in euros. So when you do see the dollar moving up, it's the guys that are taking advantage of a strong euro and a strong yen and converting it back into dollars. That would then effectively lead the value of the dollar to move up. But when dollar goes down and Bitcoin goes up, fundamentally, you're exchanging dollars to go into Bitcoin. But sometimes you see the dollar going up and Bitcoin going up. And when you see that, it's only happening because at these levels, an appreciation of a dollar means that investors are having to spend less to pay for Bitcoin. So that's why you sometimes do see Bitcoin moving up and the dollar moving up. And you're there like, hold on a second, it's against the US dollar. Why is Bitcoin going up and the dollar dominance is going up? Psychologically right now, investors are trying to get out of dollars, okay? And they have to go elsewhere. And the predominant currency they're going to is the euro. What they do with that euro is going to reveal whether or not they're going into the US stock market, which means that if they're exchanging on euros, look at the euro strength right now. That is wild. It is wild right now. But there are euro participants that are like, okay, you know what? I think that the dollar is at a huge discount right now. I'm going to exchange my euros and then go into dollars, get my dollars and get a massive amount of dollars based off the currency conversion of the euro. And then I'm going to go into the stock market, which in principle would then lead the stock market to move higher. But the stock market hasn't moved. And the euro's moving up too aggressively. It's not even a stop run, ladies and gentlemen. It's backed by macroeconomic data. It's backed by intention. It's backed by perception that I can earn more yield going into euros by exchanging my dollars and picking those euros and going elsewhere and investing in European markets. Okay? In my opinion, that would have a natural impact on the stock market. But then Trump could turn around and say, we've got to deal with China, and the stock market shoots up. And that's the environment that we're in. Yeah? I hope that makes sense. No worries, my friend. Hey, did you hear about Did you hear about? Yeah, I've held the talks. Yeah. Do you think this could ease US-China trade tensions, or is it political posturing? I don't think. Look, it's saying here, China and Trump are holding a call. All right. Unless we get the deal, then initial reaction has happened, and that's it. There's nothing set in stone. Right now, we're all on the edge of our seats because we've got the data. And every time the data comes out, the Fed's like, yeah, well, we need a little bit more, you see. You know? Cool. Any other questions? Whilst we're doing that, if you are trading, ladies and gentlemen, BTCC allows you to trade Forex, crypto, and the NASDAQ and the S&P and stocks at the same time. You can trade gold in that as well, and MicroStrategy, and NVIDIA. It's a good place to hedge exposure if you do have crypto. So if you're in certain positions in crypto right now, you can exploit leverage, keep it low, and you can get involved in these asset classes. So right now, you could be running longs on euro, you could be running longs on gold, and if you're in a drawdown on your crypto, this effectively acts as a hedge because it gives you the option to trade on various assets. Okay, so if you want to check that out, go check out the link in the description under the Traders Reality description in this live stream. What a clown. What a clown. Anything else, guys? Anything else? What's your opinion on Powell? Have no opinion on Powell. He's the boy. Tino, US Brinks box system still in place in the news when Trump tweets times. You know what? It is still in play, you know? And when you look at it, I mean, it's very tricky because you've got the Brinks box high, Brinks box low, and whatever one it takes, roll with it. And if you took advantage of the short on the break of that, happy days. But if you didn't pay yourself, yeah, it would have come straight back up again. You know, so that's something you've got to take into consideration. Here we go. Oil's trading up positive for the day. That's interesting. Very interesting. So when oil starts to move up, that's when things start to get a little bit concerning. Maybe now it's tethering away from the idea of the dollar because oil was trading alongside the dollar. So oil's down, dollar's down. But now oil is up, dollar is down, the stock market is up. Okay, so be very careful. Be very careful with that. Bitcoin, where you at? NASDAQ making a nice little move there. Have you liked the stream, ladies and gentlemen? What do I think of Sui? Sui's all right, you know. And you know what? I tried trading Sui over the weekend, a few weekends ago, okay? And it's an absolute nut job, okay? It is an absolute nut job. It's very choppy, but it does it does respect the vectors. It just moves really, really well. And I think that see, I don't look at altcoins in the sense of looking for long-term. Could pull up any altcoin and be like, okay, I just fancy the idea that there is a vector candle I want to trade back into. Okay, so if I think that this is now an opportunity to short Sui and I trade back into the logic of the vector candle, then happy days. I'll trade that logic. Okay, don't care what it does. I know there's been hacks and what have you in various altcoins out there, but it's just my luck if I do decide to run a short and something great happens and it shoots up. So that's what the risk that you have when you trade altcoins. But what you could effectively do is when you're looking at altcoins from a trading perspective, if you were to add the Bitcoin dominance chart to it, okay, let's put that there. If you were to add the Bitcoin dominance chart and look at that, okay, you will find that sometimes, of course, when the Bitcoin dominance peaks out, so you've got to wait for the dominance to hit a specific high, okay? And where that high ends up, you've got to go find an altcoin that is showing you the activity in terms of vector candles, where there is activity. So like, look at this area here. You can see at the peak of this Bitcoin dominance chart is where Sui in principle had come down, okay? And then it started to find traction and make the move up, Bitcoin dominance down. And it's just a visual measure. It's like, it's correlation coefficiency, basically, okay? So as long as one's going down, if it's negatively correlated, it means that when Bitcoin dominance is up, Sui is going down, and vice versa. But then sometimes you do get a positive correlation, okay? And the positive correlations are the moments where you want to step away. Avoid positively correlated assets. Why? Because in relation to dominance, okay? So if you're trading an asset that is against the US dollar, that's your correlation right there. Dollar up, asset down, or dollar down, asset up, okay? But when you end up seeing dollar up, asset up, okay, that's where you're like, okay, as much as it's a positive correlation, the logic doesn't make sense. But then going back to what I said earlier on about the value of the dollar being so low, but it's increasing, gives me the opportunity to buy more of the asset as the dollar appreciates. Well, you'll get that with the dollar at these levels, okay? So it's something that you can try and take advantage of. See, right now, look, you've effectively got a bit of a positive correlation coming in. SUI is moving up, dominance is moving up, but now SUI is starting to turn, and Bitcoin, in principle, is also starting to turn, okay? So just be very careful when you're using it, but it's a snapshot. And the best way to use it is when you've got peaks, where there is aggressive behavior in the actual dominance. That's where you're going to get the clue about whether something is going to go negatively correlated to the Bitcoin dominance, whatever. Anyways, Tino, can you look at Tau USDT? Let's have a look at Tau USDT. What have we got here? Again, ladies and gentlemen, like, I mean, look at that. It's a bit of a bleed to the downside, quite frankly. I'm not really seeing anything here. Get rid of that. Yeah, you're going back into vectors. It's when you see a nice trend like this, okay, based on the way it moves, okay, when it's going down and then pumps, get ready to sell it because it's just bucking the trend. It's clearly a news play, okay? Then it just rolls back down. You'd expect the recovery of the wick, but they've come back down into the liquidity, and I expect them probably to come down a little bit more. You got Vector Candle at $340, so take that into consideration. Tino, what color is your Bugatti? Red. Tino, can you explain the Brinks box trade? Give us an example of a trade on the Brinks. Well, if you are a Platinum member, you will get access to the PDFs, right? The PDFs explain the Brinks box strategy for you, okay, in thorough detail. You get a checklist, and it shows you how to utilize the Brinks. In my opinion, ladies and gentlemen, during these markets where it's very difficult to navigate the logic of where price is going to, or what price is going to react to, the Brinks box itself is a very sophisticated point of trading. It's a very, very, it's clear, and I call it the saving grace. That's what I call it. It's the saving grace strategy, all right? Because you've got fixed points in the chart. You're getting real-time information. That checklist is what that talks about. But the basis of it all is this. When you've got a Brinks box, okay, that creates itself, it takes the first high and the first low that is formed from 2 p.m. UK time, which is 9 a.m. Eastern Standard, going through to 3 p.m. UK time, 10 a.m. Eastern Standard, right? It's the first high and the first low that's formed. So here's the first high, here's the first low, okay? How does price react? Well, that's all going to be based on where you see the vectors. What's going to happen with the macros throughout the day? If they do form the high and the low, okay, are there any vector candles inside of the Brinks that they're going to want to come back into? So they'll manipulate price for that 1 hour. Then whatever direction it takes, you're going to trade in that narrative. So for example, if price can break above the Brinks box high and you see a green vector candle breaking its way from there, and there's no vectors that are getting recovered inside of here, and they haven't got any vectors to recover, then happy days. Take your long and up you go. Some of you might know it as the orb trading, opening range breakout. Same principle. And you can have various opening range breakout philosophies, whether it's the first 15 minutes, the first 5 minutes, or even the first 3 minutes, okay? But the Brinks box effectively is the money trade. That's the one that will set the market up, and it will give you the logic of where price is likely to go. You've also got the Asian session ranges that are formed on a Monday. Look at Bitcoin. It's not even breaking away from the Asian session range that is formed on a Monday. So anyone that's a holder on Bitcoin, you've got to look at this and say, well, has Bitcoin actually gone anywhere? No. From the start of the week, it's not been able to break out of this range. So you could say you're in accumulation with the idea that if you're marrying good news together, then Bitcoin's going to be coming up. Alternatively, if it doesn't, then you can say, okay, then if it breaks below the Asian session range, I'm not going to buy. But if it breaks above the Asian session range, I'm going to add, okay? And the Asian session range from Monday gives you that logic. Look at this, Monday, Asian session range, okay? If you were to put this on your charts at the start of the week, you would have been able to understand whether or not Bitcoin was going to continue higher or lower, okay? Look at this. They held price on the Tuesday, couldn't even get out of the Asian session range, okay? Then on Wednesday, they stayed where they were. Thursday, they came in, tried to go up, they breached the Asian session low. And if you're looking at that thinking, you know what, if I were to run shorts on that logic, they've clearly demonstrated resistance up here, and you trade away from the Asian session range, you would have been able to exploit movement to the downside on Bitcoin over the next couple of days. That's how we use the Asian session ranges, ladies and gentlemen. It's always, the key takeaway is to trade away from that range. Always trade away from it. So when you get the first high and first low that's formed on an Asian session range on a Monday, and it breaks away from that high, trade away from it. So you are looking for longs away from that range, okay? Let's go and have a look at another one. Here we go. So this is Monday Asian session range right here. Doesn't always look so clean, okay? Because you do get accumulation in Bitcoin. But look at it. Asian session range, they moved away from it, come back up, and then they moved back down again, up, and then they consolidated. So you could then say, okay, seems like every time they mark up, trade away from the range. Find the high, trade away from it on each trading session. If you notice, they keep on marking it down every time they try and come up. So there are various strategies that you can utilize with regards to the Asian session range. Tino, who is Grace? Why are you saving her? Don't worry about that. Tino, what do you think about the idea that the US wants to keep Russia in the game, especially in Asia, to weaken China influence there? Is it possible that they'll trade Ukraine to achieve that goal? Well, Trump's putting out tariffs on Russia, and Russia's like, no problem. You know, there's no issue with that. Do you know what, guys? I frankly don't understand something, okay? It's fundamentally, okay, dollar is going down, all right? And assets should be, they shouldn't be appreciating. But Forex, different story, okay? Where's Euro at? Okay. But US stock market is already struggling. It's climbing, but not climbing with conviction. And whenever it rallies, there's no volume with it. For me, it's topping behavior. How many accumulation days have we got on the NASDAQ? Minimal. How many distribution days have we got on the NASDAQ? Look. Let's just refresh this and look at where we are. 3 days of distribution, that's volume above average. That means selling on the NASDAQ. And 2 days of selling on the S&P. Where's your bullish? Where's your buyers? Where's your buyers that are putting money to the market? Look, bottom right here. Volume below average. So prices of the NASDAQ in the indices, they're appreciating, but there's no volume to back it. We need to see a follow through. We need to see a day where it's pushing price up. You can see that the market's not trusting Trump, because even though Trump's on the phone with China, yeah, he could turn around and say, we've got a deal. But what's the deal? 110% tariff. The market's going to be like, okay, you got the deal. Awesome. Pump. And then they bring it back down because the tariff's too much. Okay. Trump's on this deficit story. It's going to benefit the US in 10 years' time. The market hasn't got that time. It has to price it in now. Yeah. So if you haven't got the volume, I mean, if you look at the volume to this rally to the upside, above average, above average, above average, above average, above average, above average, it quantifies it and says to you there is money coming in, right? But when you don't have the volume, it goes up and down. You can't make sense of it. But you can go back to the logic of if the market's going up with no volume, at a moment's notice, it could snap. Look, price action's just been so compressed, but the relative strength is there. But it's not on strong volume. That makes sense. Tina, if you have a bias that this is a topping formation, what area with the NASDAQ S&P would the market move to spark interest? To spark interest to the downside or to the upside? So if we're going to look at the NASDAQ itself, me, quite frankly, I'm expecting the stock market to correct. Look at all of this range right here, okay? Look at this. It's very choppy, all done on light volume, right? The only way we can validate the idea of the market going up is when they take a shock to the downside. It has to happen. Then you'll understand why I say to you all, we need Bitcoin to come down. And most people in this channel lose their shit if I'm coming across as bearish. You're not looking at the bigger picture here, yet you're coming here to tell me to look at the bigger picture when I say to you, Bitcoin's going to go down. You're not looking at it. Look, for every corrective move on the NASDAQ, it equally comes up and recovers it. Equal corrective, straight back up. Okay, let's go and do it again. What have we got here? Massive corrective move. Equally a bigger move back up. What are you not reading? You need the crash. You need it. Because the need for the crash gives you the opportunity to buy. Now, someone did say, yeah, but Tino, I'm already in positions with Bitcoin. I don't want to see my value losing its investment. Sorry, I don't want to see my investment losing its value. What I say about Bitcoin holds no truth to it. Why? Because I don't know where Bitcoin's going to go, but we get a good idea about how people are going to react to it. I can't tell you Bitcoin's going to go to 1 million in the next 3 weeks. And that's what people are looking for. They're looking for that indefinite price point to justify why they need to hold on. But when you understand the markets, and I have committed a perverse amount of time looking at these charts, not just looking at charts, just understanding why did they react to that this way? Why did they react to that way? Why is it not doing this? And when I'm always asking the why, it then starts to open up a portal of, let me try it this way, and I'll go and do it that way. But the one thing I can tell you is when your market shits itself, you should welcome that, because the longer it drops, the higher it will go from it. Every corrective move that you've seen them do, they've come back up and recovered it. Come back down, come back up. Dow Jones is up over the past 5 years. It's up 71%, ladies and gentlemen. The last 5 years, the Dow is up 71%, 61%. They correct and they recover every time. Now, if you're talking about Bitcoin making a move to the upside and then it comes back down and it drops $1,000, Tino's bearish, man, please, man, what are you here for? You want to make money in this game. So improve the odds of you making that money by taking in as much information as you can and come to an understanding with your capital and say, yes, please, I'm going to take a trade on Bitcoin. No, I'm not going to take a trade on Bitcoin. Look what's going on. Horrible. Everyone's gone in. They've sold the Bitcoin and everyone came in and bought it. These guys are quickly buying. The same way it drops, it's the same way it's getting ready to go back up. Now, forget this. Yeah, it's coming down, okay? I mean, this is any other news that's coming in. I mean, the green vector candle recovery. But welcome the move lower. It's going to hurt your investment, but guess what? You're in investing. Buffett has had days when he's been down nearly 50, 60 billion. I mean, he still sleeps at night. Probably like a baby and wakes up every 2 hours and cries. But so I just wanted to air that out with you all, ladies and gentlemen, because it is a bit frustrating, you know, where, all right, sometimes my titles are a little bit off. They encourage you to come in. But I know myself, all right, that no one in crypto is telling anybody to pay attention to either the bonds, either the carry trades, the logic of the Aussie yen, the logic of the euro, the logic of why the dominance and the perceived value of something. I actually believe I'm giving you, I hope that I'm giving you something that you can walk away and say, fuck, man, that guy, you know, got a point. I don't care if you agree with me or not, but I know I'm giving you factual knowledge about the way the game operates. And that is an edge. And you can utilize that and make a penny or two. Capiche? Mad love and respect, ladies and gentlemen. I'll be tuning into you all later. Rant over. Peace.